Desk fees. This one's interesting. Depending on the brokerage that you're with, this is or isn't applicable for you. A lot of brokers require agents to pay what's called a desk fee for office space. When you're there using their resources, when you're there using the support services, sometimes agents may pay out of pocket so that they can deduct these fees from their commissions for this desk service fee. If those fees are deducted from your commissions, you as an agent need to remember that this expense is still occurring, and don't forget to document it properly on line 10 of your Schedule C. Professional memberships. Listen to that phrase as it exists. Professional membership. Any type of fees for a membership or a professional organization like the NAR. That's $156 per member in 2024. This is deductible as required to perform real estate activities. This is a membership fee, not a cost of doing business. The expense can be documented on line 27A. Professional memberships geared toward recreation, pleasure, social purposes do not fall under this category and are not tax deductible. But if it is a business club where you go specifically for the expectation of doing business, like we have here in the Tampa Bay area, yes, it is absolutely a professional membership, and it is a requirement for you to be able to do business. Not your golf club, however, which is recreational, as well as you may do some business there, but the business deduction that you should be taking in that case is if you bring a guest to the club and you had to pay green fees for them or whatever as a guest, that portion is what you needed to do business, not your every month membership to the golf club. I would be remiss if I didn't talk about taxable deductions as well for charities. Charitable donation tax deduction is not specific to real estate agent, but it does get considered. For an agent to use this tax deduction, the charity must be an IRS recognized nonprofit organization. And this may be a nonprofit that you do business with or that solicits business with you as in a local community, one of the food banks or one of the local ministries or churches in your area, or one of the VA halls. The donations must include cash gifts and any donations of goods or services. So just make sure that you have the proper documentation to show anything that has been gifted, essentially. Get a receipt, get acknowledgement letters from the charity. These are the things that are essential for claiming those deductions on the 1040 schedule. Some interesting questions this morning. We could go into all kinds of gray areas, but I prefer to keep tax deductions when it comes to real estate kind of black and white. These are the ones that absolutely don't get questioned. These are the ones that you should absolutely be doing. As a real estate agent, it's kind of wide open for you in business as to how you can take deductions and take advantages as this business line, because it takes so much financing and effort to keep the business online for you to be able to do it. So I wanted to make sure to address that before I start hitting the questions this morning. So let's see what you got for me today. What records do I need to keep for tax deductions? Okay. Again, I'm a big tech guy, big software proponent, so I always make sure to use some type of digital capture for everything that I do. And we get really busy in this industry. Not only as a broker do I have to maintain records for myself, but I also have to maintain things that I do to help the brokerage. So mine's complicated enough. I take pictures and take notations of these things as they happen throughout the year. That includes receipts, deductible expenses, detailed miles logs for my vehicle, bank and credit card statements for collaboration purposes. These things are all essential. Also, you need to make sure to keep your tax forms like your 1099s and any W-2s if you're a payrolled employee, any relevant emails or correspondence that might support the deductions that you take. These are the type of records that should be kept for at least 3 years from the date of your filing to your tax returns compliance for. It'll also help facilitate any potential audits that you fall into. Difference between a standard deduction and an itemized deduction. Yeah, good question. The difference between these two is primarily the method that you're using to reduce the taxable income. So the standard deduction is a fixed amount that's determined by the IRS based on your filing status, and it's adjusted annually based on the level of inflation. Contrast, items deducted while requiring listing an individual deductible expense, like mortgage interest, state and local taxes, charitable contributions, medical expenses, those can exceed that threshold. So taxpayers usually choose the method that lowers their taxable income the most. So you can use the standard deduction, meaning, I'll just give you an example. I'm given $5,000 for the federal government for fuel, which we know that's not the case. If I go over that, then I would use my receipts versus the standard deduction, the one that gives me the best taxable credit. How long am I required to keep tax records? All right. Last IRS advisory that I had seen, tax records have to be kept from 3 years from the date filed. However, you file your tax return 2 years from the date that it's paid, or whichever is later. So if you underreported your income, for example, keep your records for 6 years. Ultimately, it's the easy thing. If you made it quick, if it was a simple form for you, 3 years will be sufficient from the date you filed it, not from the tax deadline, but from before that, right? If you file in the end of January, then you only have from that date 3 years later. If you are underreporting your income by that 25% and then just save it for 6 years, the rule of thumb used to be save everything you need for 7 years, period. It's probably easier to remember, but if you want it broken down, that's what it needs. Ultimately, claims related for bad debt reductions or worthless securities, you need to maintain these records for a lot longer term. So any case where no return is filed, or you probably better keep things indefinitely because these records are going to be recommended later. In closing, after you have completed your first tax return in real estate, process generally becomes a lot more manageable every single year. A lot of real estate agents initially overlook some crucial real estate tax deductions, which is why we have this reminder course every single year. And it often leads you to overpaying a higher tax bill because you weren't able to understand what you needed to identify to take advantage of the things that are given to you by law. Agents can significantly reduce their tax liability by simply saving and staying proactive about these deductions and maintaining these records. You should absolutely enlist in a good tax accountant and a tax strategist throughout the year because taxes change and the tax reforms change all the time. We have a new president who is adamant about making some pretty serious tax changes, or at least making some pretty serious tax change promises to the American people. Over the next 4 years, particularly, I would say make sure you're working with a tax strategist. Your brokerage might even be able to bring one in to help give advisory services as a group. But then your tax advisor, the person that actually prepares your taxes for it every year, that additional signature is going to insist that you're keeping good records. And you need to have a basic understanding of what tax requirements are from the very start. So sit down with them, take the time throughout the year to look at your expenses, track things as they come up so you're not scrambling at the end of the year. Because I promise you, since the beginning of the year in real estate is the high season, last thing you want to do is be scrambling for records while you're busy trying to close 2, 3 more deals than ever before throughout your year, and potentially miss the deadline, costing yourself more headache and penalties. So take the time, keep an eye on your expenses, keep an eye out for these deductions so you can safeguard for any future financial surprise.